What if I told you that I had all of the price action data for Bitcoin, Ethereum, Total 2, Total 3, others, going back into the beginning of these charts, and I've actually analyzed all of the data for you to show you patterns that you should be paying attention to based off of historical performance. Every single monthly close for Bitcoin going back until it listed. But more importantly, identifying the underlying patterns of each year. Now, maybe you are not a believer in the 4-year cycle. And I understand that there's lots of reasons for you not to, mainly because all of the extremely intelligent people yelling at you on YouTube and X have been proving to you all along that it's a super cycle and that Bitcoin's going to go to $300,000 this year. And they've all said, no, the 4-year cycle is broken. This video might not be for you if you're one of those people that believe them, but if you are at least open-minded, I have something really, really interesting to share with you. This is the Better Crypto Calendar. It's from the Better Traders. It's based off of a Google sheet that looked really, really ugly before. And with my OpenClaw bot, Betty's help, she prettified it and the data is incredible. It's so much more reliable and useful. Now, what I want to do is not go through this entire sheet because that would be super annoying and super boring. You can experiment with it, you can play, you can investigate. This is a literal just free resource that's available at the link below. No sign up, no email, no credit card, no cookies. Literally, it's just free. So what I want to do is just skip all of this wash of information real quick. And I want to come here, okay? I'm not trying to hide anything. It just helps me to get to my point. I've been tracking Bitcoin's monthly returns, basically starting back in 2011. Now, every single year since 2013, we have started a very consistent pattern of top, bottom, recovery, rally. And each year that happens, we cycle through the same thing. Top in 21, bottom in 2022, recovery, rally, top in 2025, and that means we're here in a bottom year. While we can look just year to year, which is helpful, it is interesting, and we can see median monthly performance, which April is like right on the money here. And we actually see some really nice green months here as well for May, June, July, August, not so much, September, not so much. There's actually something bigger to this, which we're going to scroll down for. And again, I'm not trying to hide anything on purpose. There's a lot of crazy information on this that you can look at. This is where I want to stick to for a minute. This year over year comparison graph is awesome for several reasons. It gives us a good understanding of previous bull markets, as well as what the average expectation should be moving forward. So if we were to just focus on the average performance for Bitcoin over every top year, and again, that's 2025, 2021, 2017, 2013. We can see that we have some pretty incredible moves. Now, it's an average, so no, sadly, we are never going to see Bitcoin pull a 124% month. Again, this is largely due to 2013 having a 468% move. And that's actually a really good point to make. If we compare 2013 with 2025's performance, some months are spot on. Other months are just sad. While we've seen some okay months, like 2025's 14% close in April is absolutely dwarfed by a 47% close. Or worse yet, March, Bitcoin closed down 2%, but in 2013, 179%. What gives? Well, when any asset is brand new and it has no previous experience and it's just an market or rather price exploration mode and is trying to figure things out, it can have some incredibly explosive moves. Look at the chart for Injective Protocol. Look at Caspa. Look at MYX. Look at Doge. So yes, as the market cap begins to expand and not bloat, but just get bigger, the likelihood of these insane returns month over month gets reduced quite a bit. So why include it? Well, it is valuable historical information. Now, if we look at 2017, 2021, and 2025, we get some really interesting observations here. Noting that in October 2017, 2021, we actually had really good green closes there, which is really interesting. Although November was only really green in 2017. 2021, that's when it topped for BTC. It actually topped in December in 2017. But anyway, that's neither here nor there. What I want to focus on, though, is the fact that we're in a bottom year right now. 2026 is a bottom year. And what's wild is that if we do the same exercise here, we get a pretty good roadmap based off other historical bottom or bear market years, 2022, 2018, 2014. And if you just caught what I said about earlier years, 2014 is still in Bitcoin's infancy as a toddler. So the 2014 moves were pretty wild. Some months were insane. 2014, it was up 40%. Other months were absolutely atrocious. 2014 in February, down 32%. So when an asset is young, it's going to have these crazy swings in both directions. So this is where the average really helps us to see things a little bit more clearly. So while the average of May says 2% here, if we look at 2018's performance and 2022's performance, both of these are at shockingly the same level, -19 and -15%, so on average, -17. June, the bottom average here, or the bottom year average, is at -16%, but the reality is that 2018 was at -15%, 2022 is at -37%. You might have heard me on the trading channel talk a lot about me expecting a very bearish May and June. This is why. Now, let's do a little bit of an activity, and this is going to be kind of wild, okay? We're going to take the price action for the last two bear market years in May and in June and average those two together. So we're just going to look at those last 2 years. So on average, we have -17 here for May, and then 15 and 30, we're going to say like 23%. That's kind of in the middle. Not exactly. Actually, not even close. It would be what? Oh my gosh. It'd be more like 25, 26, or something like that. We'll just do 25 because it's easier in my brain. -17, -25, okay? -17, -25. What does that mean? Now let's go over here. I'm going to put those numbers in because I am going to forget them. -17, -25. There. Got it. What does that mean? These are the averages of the previous bear market drawdowns in 2022 and in 2018, where we had some red pullbacks in May. Okay? If we were to magically close the month right here of April at $76,891, which won't happen. We still have several days left until this candle closes, but let's say that that's it. And this is where we open May. Well, this -17% is forecasting that we will fall down and close down -17% by the end of May, which is right here. And we're looking at the monthly, so it's a little bit easier for me to do this. And then the next move down says -25%. So if we go down -25%, then we're going all the way down here to about 47K. Now, these numbers don't necessarily align with the targets that I've shared with you because all of this data right here is focused on the monthly close. What does that mean? We go up to the top. Right now, we're looking at the monthly returns from 2011 to 2026, and all of these are showing the monthly close. So if it's a green candle, then it's going to be a green number. If it's a red candle, it's going to be a red number, and it's measuring the open to the close, open to the close, open to the close. So what does this mean, volatility? So glad you didn't ask, but I'm going to explain anyway. Volatility, you'll see these numbers get insanely higher, like embarrassingly higher. No, the sheet isn't broken. Your understanding of it might be a little bit gray. And I don't think anyone really talks about this as volatility, but what I define volatility as is best expressed over here on the charts. So we're going to hide this all just for a quick second. And if we were just to look at our current month, April 2026, I measure volatility if the candle is green from the low to the high. And this month, April, so far, has had volatility of 21%. Make sense? So if we were to have a red close, then we would be measuring the top to the drop or the top to the low, which for November 2025 was negative 27.5, which I would round up to negative 28%. The monthly close for November at negative 17.55, which would mean that I would increase that to negative 18. So negative 18% would be the monthly close, negative 28 would be the volatility for that red month. Does that make sense? So glad you answered yes, even though you maybe did, and people are like wondering, what? Are you okay? Just look at them and go, just for fun. Okay. Sorry. I'm literally just in a room. I say it all the time. It's so fun. It's true. I'm literally in a room by myself talking to a camera, so I can have a little bit of fun imagining me talking to people, right? Right? Let's go back over here. Now we can take this same information for the volatility and come all the way back down to look at volatility for previous bottom years. Oh yeah. Now we're going to be seeing some crazy stuff. If we look at just the average, we're going to be seeing a lot of stuff. For April, on average, it's not such a great month, -2 on average. But May is down to -4. June down to -15. And yes, trust me, I see the big spike. I'm going to get to that happy ending in just a minute, but we're not there yet. And oh yeah, you better be paying attention to August, September. These are really bad on average. Now, let's just focus on the last two bear markets, okay? On average, April's a pretty good month. Between 2018 and 2022, we're looking at least 20% in terms of volatility. Now, if we factor in 2014 was -36, pretty rough, but again, a very young, immature market. Now, when we look at May, which is crazy, in May over here in 2014, weird recovery at 51%, but we're going to focus more on the mature or maturing markets, 2018, 2022. Volatility now says -29% to -33%. So again, averaging those two, that's -31. Let's go back over here. Again, if this happens to be the high, -31% brings us down to 53K. But we also know that most months, they don't just start here and then they just absolutely dump. We're going to see upper and lower wicks to some extent. So let's say that we get one more push up to 80K next month, just below it, maybe even a little bit higher. If we see that move down to 31%, that puts BTC here at 54K. I'm telling you now, the moment that 60K is lost, we're going to see a ton of long liquidations for Bitcoin. This means that we're going to see a lot of downward pressure. So a quick little drop down 8% is a very kind, very, very gentle and kind way to put that. I actually think it's going to be a lot bigger. In fact, we'll probably go down to about here to 50K and just barely eke past that level. That's the more realistic one. But let's stick with the data so that way we're consistent, okay? So do things get better in June? They do not. The average of 2018 and 2022 in terms of the bottom year volatility performance, again, it's a wash, but we're going to say basically like 35%. So again, taking the same concept where I don't know where those levels are exactly going to be, but 35% is a pretty big move. Okay. I don't think that we're just going to get a candle like this or a candle like this. We're going to see volatility on either sides of the aisle. So let's just kind of move it up. So maybe we get a little bit of a bounce here up to like 60K, which would actually make a lot of sense since that's the low here from February. And we go lower down about 35%. Do you want to know what's weird about this? If you guys have been paying attention, what's this price point here? $38,751. This is actually where I've been predicting that Bitcoin is going to bottom, $38,555 to be exact. Also, we have this level here at 49K. And again, the index is not going to give us a perfect on the dot number that I like to use. But what's wild is that this calendar is showing us a pretty good chance that we're going to see a drop lower in the months to come. And if you're noticing that July looks pretty good as well, which you should be happy about. The only caveat to July's volatility that's very positive, again, on average, is about 35%, right? Something around there. So 35% move to the upside would be incredible, but think about how low we're going. A 35% bounce, maybe, but that could be somewhere like we go a little bit lower from 38K. So a 35% bounce might be something like this, where we're 36K up to 50K and we go all the way back down. Why am I saying that? Am I trying to be a jerk on purpose? No. If we go back over here, here's this big volatile move of 31.5%, 32% in July. After an insane drop from the month before in June, down 45%. Going back over to 2018, went too far. Sorry, up. Here is May and June and July. May, 29%. June, 26%. And here's July's glorious 40% move. That's fantastic. Everyone's excited about this, right? The problem about how good this looks and I just realized I was drawing on the chart and you guys couldn't see it, but let me just show you on the chart. Here's that 39% move in July 2018. Here's this big jubilant July in 2022 where it moves up 32%. That's good, right? The problem with these big green moves is that they're coming after a lot of pain. 63% down from the top in April to the bottom in June 2022. And then we get a nice little, well, here you go, thanks for playing. A little bit of a dead cat bounce and it goes lower. If we go back over here to 2018, we're seeing a nice bounce of 39%, which feels awesome after 2 months of a punishing 42% down. Nice consolation prize. Thanks for playing. And it went lower. Okay? So if we're thinking about July having this incredible bounce, that could happen. Just keep in mind that 35% average move, it's most likely going to be coming after a lot of drawdown. Potentially, and I have to delete a bunch of stuff to make this so much more legible because it's so difficult to see right now. Potentially looking at a 51% drawdown. I don't have any verifiable proof. I am not a time traveler. That'd be kind of fun, but also kind of weird. But if we see over the next 2 months a 52% drawdown, like I'm expecting we will, and we get this nice 35% bounce, maybe up to 53K, 52K, something like that, people are going to be super ecstatic. They're going to be so happy to see a bounce of 35%, which they should because we just saw a drop of 52% total. So does the data really look favorable? Not really. And the problem with this data too is that after this dead cat bounce in July, August on average is 24% down. September is 18.5% down. October, maybe a bit of a bounce, but this is actually when I think we're bottoming out because bear markets typically last 12 months, and we topped out in October 2025. The best thing I can tell you is that we are closer to this event because we're heading into May. We got 1, 2, 3, 4, 5 months left of this bear market. Potential 5 months left. It could go faster. It could take a lot longer. You don't want me to show you the longer scenario. Just trust me on that, okay? Now, more importantly, is this a guaranteed thing that will happen? No, I don't have a crystal ball, but what I can tell you is that based off of this historical data that I've been collecting for a long time, literally since late 2020, I've been building out this sheet and tracking not just Bitcoin, but Ethereum, Total 2, Total 3, others, Total ES, Total E50, Total 100. Before TradingView erased all the data, I don't know why they did that still. But now I have some great stats to share with you, and bull and bear, recovery, rally markets, all this fun stuff to share with you to give you an idea of what we should be expecting in the months to come. It's absolutely crazy. I want you to play with this stuff, okay? I want you to let me know in the comment section down below. Also, what do you find about this data that maybe even I'm overlooking? I'm only one person. I only have 2 sets of eyes. Wait, 2 eyes. Well, technically I have 2 sets of eyes because I have glasses, so I'm 4 eyes, right? So the main thing you need to know about this is that historically speaking, the argument for a red May and a red June is much more likely until we get to red October. Yeah. Just sometimes they are so good, they just kind of come to me like that. That's hilarious. I'm going to start making the memes now for red October. Anyway, the patterns are there. Bitcoin doesn't have to do what it's done in the past. 100%. It could do whatever it's going to do. It's a market. It's a fluid entity that will move in whatever way it wants to move. I'm still of the belief, though, that we will see a larger, longer, deeper pullback over the next 2 months, which will inevitably have Bitcoin go down as low as $38,555, which is my target for the bottom and has been for months. So once that happens, trust me, I'll be a very happy man. Not because I like seeing prices go down, but that I know what happens after we hit that. We have a dead cat bounce. People kind of come back, then they get wiped out on the dead cat bounce as the price falls down, and then we accumulate. We accumulate every single coin that we are interested in and we've been watching or eyeing greedily as they've had these crazy rallies. It will be a very, very, very good time to be a trader, okay? Even right now is a great time to be a trader, but we're getting to a very, very important and pivotal and super important part of the bear market, which is the capitulation. This is where millionaires are born. I kid you not. And not shorting, it's accumulating. We're not there yet. I'm not going to talk about it. So that's why you have to turn on your notifications. That's why you have to stay subscribed and keep an eye out for videos from me in the future. Now, before you go, I had a really interesting conversation with Matthew Siegel from Van Eck, like that Van Eck. And they also believe that Bitcoin is still adhering to the 4-year cycle, which means that the evidence for a pullback is even stronger based off of what Van Eck is expecting as well. Watch this. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.